it sort of goes in line with the way you managed your balance sheet also during the bull market, right? CleanSpark was notorious. I think is what makes you guys really interesting is you weren't hodling during the bull market. You were selling coins, and might have got some heat for that, but it turned out to be a really good idea. Going forward, would you expect to implement a similar strategy in a future bull market? And I know obviously data can change and circumstances can change, but if you just had to guess, you think that's something you guys would likely do again?
So my answer to that is what it always is. We're going to always choose strategy over ideology, right? And the strategy can be multiple things, right? It can be what shareholders value, which we decided was not the strategy to choose, right? There was a lot of people that were really banging the drum of HODL's all that matters. Well, the reality is we felt what mattered is paying the bills out of revenue instead of paying the bills off of selling stock or getting into debt, right? Because those are the other two options. At the end of the day, you have to pay your power bill. And just like, the gold miners don't just stockpile gold, they have to sell it to the jeweler who makes something from it in order to pay their workers and things like that. As a miner, we have three places we can get our capital. One is from a revenue stream, which means selling Bitcoin. The second is debt, and the third is equity. And it's about managing how you pull those levers. In this bear market, the debt lever doesn't exist. And anybody that pulled the debt lever in the bull market, many of them went bankrupt or had to really struggle to get out of the debt. Everybody can read about, even headlines 2-3 weeks ago about people having to manage their debt, other miners. We chose to avoid the debt. The reason we started selling Bitcoin at the peak was because we felt the market had reached an irrational point, explicitly on the mining side. The amount that people were paying for rigs no longer made sense from an ROI point of view. And so that's when my focus became deal hunting on the miners and not buying the latest and greatest, but instead focusing on the ROI, finding machines that would pay off, within, in under a year, which ultimately, of course, left us in a position we had capital and we were able to buy the latest and greatest that pay off in the shortest amount of time. That choosing strategy over ideology, whether it comes to HODL or anything else, capital management, has positioned us in a place where, if you look at our balance sheet, we have over 600 million in assets. If you look at what that is composed of between the sites, the miners, and so forth, we have produced a bigger fleet with less money by almost 100% compared to some of our peers. One comment on that, sometimes analysts want to compare, market cap to net asset value. And the net asset value is the value on your balance sheet. Well, if our assets on the balance sheet were purchased for $15 a terahash or $10 a terahash, and our peers were purchased for $100 a terahash, their net assets may report higher, but they paid more for things that produce. Our focus is on capital management specific to create the largest output for the lowest investment to get the greatest bang for our buck for our shareholders. And I think we've done, I may be speaking, for a little bit, leaning to my side, but I think we've done a phenomenal job, and I think we've done a better job than anybody else.